Hello investors, welcome back. This video is part of the fundamental stock analysis series, and in this video I'll be talking about how to read the income statement. I believe by the end of this video you should be very comfortable with the income statements and you should be able to pick up income statement from any company and make sense out of it. I have used Apple as an example for this video, and you can do the same for any company you are analyzing at your end. In this video, I will be dividing the income statement into different segments and I'll be discussing them all in detail. Like what is the revenue, what are the different segments of revenue, and the other segments like cost of sales, operating expenses. And towards the end of the video, I will also be explaining why an EPS growth might not always be good for us as investors and what are the factors we should be considering into before investing into the company. I really hope that you like this video and you do get some value out of it. And if you do, please do consider clicking that like button. It will help me a lot and gives me a good feedback in order to generate more and more content like this in future. Thanks a lot. Let's dive into the presentation now. Let me start off by showing you how can we download an income statement from the website. So the keywords we will be using is the name of the company plus IR. IR is the investor relations. And once you type that, for example, I've used Apple IR. More often than not, you will see it as the first link. So once you click onto that link, you will see some page something like this. So this is the example for Apple, and this is how the Apple's investor relations page looks like. Normally what we are looking for is for any company is where all the financial data has been uploaded, where the quarterly earning reports and the annual earning reports are there. So I will be downloading the 2020 10K report for Apple for this video analysis, and you can do the same for the company you are trying to analyze. So this is how the first page of the financial report of Apple looks like. And this is the contents page. So as you can see, there are a lot of listings and we don't want to go through all of them right in the beginning, especially if you are a beginner in the investing world. So we will look into the financial statements and the supplementary data. And this is how the income statement looks like. As you can see, the naming here is given as the consolidated statements of operations. It might have different namings like income statement, profit and loss statement, statement of income, statement of earnings, or the statement of operating results. All of the namings do mean the same, that this is a profit and loss statement or the income statement of the company. Now let's look into what are the main categories we should be focusing on. So one of the way how can you identify that the statement in front of you is the income statement is that the top item here would be the net sales or the revenue, and we will see the net income or the net profit towards the end of the statement. These are also known by the names of top line numbers and the bottom line numbers. The another thing to note here is the right hand side, there are 3 columns and each column has a date associated with it. As you can see that there are different dates from 2018, 19 and 20. So this means that the data in this table is from past 3 years, and this is the income statement for past 3 years, and different columns represent each year. And the date which is mentioned like September 26, 2020 is when the financial year was closed for that particular year. So this data in this annual report will be from 29th September 2019 until 26th September 2020, and this is in the first column in this financial report. So let's look into the segment wise what each segments of the income statement represents and means, and what are the numbers we should be looking into, and how can we drive the meaning out of it, whether the company has been growing or not, and whether it is beneficial or not. So the first element to look into is the net sales. This is also known as the total revenues of the company. So this is basically the total price which has been paid for all the products and the services which are sold by the company in any financial year. And we do need to understand that revenue recognition is an important concept here and will need a video for itself. But for now, it's important to know that the revenue is and should be recognized by a company only after the product or the services being sold, they have been shipped or delivered to the customers. Now let's look into what are the different segments from where the company is generating revenues. So the product category, it includes the iPhones, MacBook, iPad, wearables, home and accessories like AirPods, watches, HomePod, etc. for Apple. Similarly, we should be looking into what are the revenues which are being generated by the product section alone. As you can see, it has been generating around 220 to 225 billion dollars of revenue per annum. You can see the trend from last 3 years as well. It was generating around 225 billion in 2018, and it went down to 213 billion in 2019, and it's around 220 billion in 2020. So this is where we can understand whether the company has been growing in revenues, or they have been able to increase the revenues year on year or not. In case of Apple, we can see it's a pretty stagnant revenue from the product section. In fact, it is going slightly on a lower side in comparison in the past 3 years. Again, this is just for understanding the income statement. Before investing any money into any company, I think it would be recommended to look into the past 10 years or 15 years of data to understand how the trend has been, and you should be able to understand what are the products of the company and how are they generating revenues, and whether do you see that in the coming 10 years, in the next 5 to 10 years, do you see that demand of that products being on a rise, or the company being able to generate more and more revenue. Again, the product companies like Apple can generate revenue by two means. One is that the number of products they are selling increases, or the prices of the products which they are selling increase. So, but there is a limit to how much price they can increase for a product, because the customers might not want the product at an extremely high price. The organic growth can only come when their number of products they're selling year on year is increasing. So the services include Apple Care, cloud services, advertising, digital content like App Store, Apple Music, Apple TV Plus, and the payment services like Apple Pay. We'll do the similar analysis here. As you can see, the revenues are increasing year on year, and there is an increase of around 15 to 20% in the past 3 years, which is a good sign. So the 20% increase in revenue is good. But the another level of analysis which we need to do is that what percentage of revenue which is generated from the services comes as a total revenue for the company. As you can see, in the year 2020, the revenue from services is around 54 billion out of the 274 billion in total. So which is around 20% of the total revenues which are being generated. I believe it's a significant revenue. 20% of the total revenue of Apple coming from services is a significant revenue, but the 80% dependence for a company like Apple comes from the product segment. And another thing to note here is that as we can see that the product segment is a bit on a slower side, or it is stagnant from past 3 years, and the services are very much dependent on the products. So if suppose, for example, if someone is not buying an iPhone, he will not need a services like iCloud, App Store, Music, Apple Music, or Apple TV. If the customers are not buying Apple products, they will not need Apple services as well. So for Apple services for the services segment to keep on increasing or keep on generating more and more revenue in the coming years, it is essential for a company like Apple that the number of products they are selling year on year should be increasing as well. So these are the analysis we will be doing, or we should be doing in the different companies we are analyzing. You need to understand that the different segments, whether they can grow or not in the coming years, or whether there is an interdependency of the different segments of the revenues. And when there is an interdependency, you need to understand what is the root segment. As in case of Apple, the products are the root, because if no one is buying the products, no one will buy the services of Apple. So let's look into the second segment. So far we have looked into the revenue section, that how the Apple is generating revenue. Now let's look into what is the cost in order to generate the products and the services it is selling. So cost of sales includes the cost of the raw material. So it is a total cost to the company to just manufacture the product and provide the service to the customers. And let's take an example of an iPhone. So there are multiple components which are integrated in order to generate or in order to manufacture an iPhone. For example, there is a chip which will have the CPU and the GPU. So there is an SoC which goes into it. The screen goes onto it. The metal which they use in order to manufacture the iPhones. So all this raw material goes into it. And what is the cost in order to manufacture the product? So they might be using the third party to manufacture the product, and they will be providing some sort of specifications, and they will be licensing the IPs like CPU and GPU from different companies. They'll be getting the SoC manufactured from a company like TSMC. So all of this cost are included in the cost of sales. So this analysis we can do at this stage is look into the gross margin. So gross margin is the percentage of the net sales which are left over to you as a company after excluding the cost of sales from the revenues. So what do I mean by that? So suppose a company like Apple is generating a revenue of $100. In the end, it is left with $38.20 in hand after deducting the cost of the sales in order to generate that product. This is what it means. And as we can see in the past 3 years, the gross margin has been consistently around 38%. So the next section is the operating expenses. So once we have deducted the amount of cost of sales from the net revenue, we need to deduct the operating expenses. And what does operating expenses account for is the research and development which the company does in order to generate new products every year on year, and then the cost of selling, general and administrative costs. So this also includes the wages of the engineers which are working for a company. So after deducting the operating expenses and the cost of sales, we are left with the operating income, which is also known as the EBITDA, which is the earnings before interest, taxes, depreciation and amortization. Net income is the bottom line number as we have discussed. And these are the net earnings from business in a financial year. So again, let's take an example of that. If the company is generating $100 as a revenue, the percentage of the net sales which are left as net income, so in this case, it will be $26 will be left in hands of Apple as a net income after deducting all the cost of the sales and after also deducting the operating expenses. And we can also see here that the net income in the past 3 years also has been very fairly consistent. It's basically around 26%. Now let's look into the next section, which is the earnings per share. It's also known as the EPS. So the formula to how do we calculate the EPS is we take the net income number from the line above and divide it by the total outstanding shares which the company has in the public, and we get the earnings per share. So one of the very common question is that how does the EPS can grow? So basically the EPS can grow in 2 ways. So one is the organic growth in revenues for a business, and the second could be the buybacks which can be done by the management. Let me take a moment here and try to explain what are the 2 different ways and which one is better for a company or for us as an investors. So as you know from the formula that the EPS has 2 segments, like one is the net income in the numerator and the total outstanding shares in the denominator. The EPS can grow in 2 ways. So one is the numerator keeps on increasing. That means the net income keeps on increasing, and the net income can increase in 2 ways. Then one thing is that the net sales are increasing, which is the organic growth, and which means that the Apple as a company is able to generate more and more revenue year on year. They are able to sell more and more products and services, and they are able to generate more revenue. So that is one way the net income will increase. The second way would be to decrease the cost of sales and decrease the operating expenses, that is becoming more cost efficient. But there is an extent to which a company can go in terms of decreasing the cost, because eventually they will have to pay for the wages and the actual material which is being used in generating the products. So the best way is that if the company is able to generate the more and more revenues year on year, and there is a high demand of the products the company is selling, that's more of an organic growth in a revenue for a business. And that's how, if the net income is increasing, your EPS will increase year on year. The another way to increase the EPS, if suppose in case of Apple, as you can see, the net income is slightly going on a downside from 2018 to 2020, but the EPS has been increasing year on year. So the net income, as you can see, from 2018, it was around $59 billion, $59.5 billion. It went down to around $55.2 billion in 2019, and it's around $57.4 billion in 2020. Still, year on year, the EPS has been increasing. It stayed same from 2018 to 2019, although the net income went down around 10%. But it has increased, the EPS has increased by 10% from 2019 to 2020, whereas the net income has not increased by 10%. So why is that happening? So the reason behind this is the denominator part of the formula, which is the total outstanding shares in the stock market. So the Apple as a company has been doing a lot of buybacks, which means that the number of shares are decreasing year on year, which helps for the EPS to grow. So as you can see in the last row here, the shares which are used in computing earnings per share, which is the basics and diluted shares. So as you can see, the shares are decreasing. So the shares were in around 19.8 million in 2018, and they have decreased to 18.4 million in 2019, and they further decreased to 17.3 million in 2020. So they're decreasing year on year, and which is helping to keep the earnings per share on a higher side, or as you can see, which helps the EPS to grow even when the net income is falling down. So we should be aware as an investors that what is the reason behind the EPS growth. So normally sometimes the analysts only talk about the EPS growth. The EPS has been growing year on year and all those things. But these are the type of analysis which as investors we need to do, and we need to understand that whether it is the EPS growth is coming from an organic growth or they are coming from the buyback. So the another very common question is, what is the difference between EPS basic versus the diluted EPS? So the basic EPS is when we take into account only the total outstanding shares which are currently in the market. But the diluted EPS also takes into account that the additional shares which might be issued to the management on the performance basis, or the additional shares which they issue to the employers who are working. So this is the stock compensation part. If they and so the number if the number of shares are increasing in the market year on year, and they are being issued for a number of reasons by the company, that will dilute the earnings per share. So diluted is more of a conservative approach, or the diluted EPS is a more of a conservative number. Normally, I think either number, if you use either number, you should be fine, but you should be considerate of the fact that the difference between basic and diluted should not be huge. If the difference between basic and diluted is huge, this means that the company are issuing a enormous amount of number of shares either to the management or to the employers, or something is going wrong, and you need to dig deeper to understand the reason behind it. So that's all from me, from my side for now, and I really hope you got some value out of this video. And if you did, please don't forget to like the video and subscribe to the channel if you have not already done so. And if you have any questions, please do leave a comment below and I'll be happy to help you. Thanks a lot. Thanks for watching, and I'll see you soon in the next video.